Recently, especially during our financial well-being work with our partner providers, we've had an awful lot of inquiries from people about what to do to get mortgage ready. I think everybody understands there's lots of documentation involved when you're applying for a mortgage. Things like ID, address verification, bank statements, savings statements, details of existing or previous loans, etc. But what we like to do is break it down into the ABC. A is for affordability. The most important thing you can do when applying for a mortgage is prove to your potential lender that you will have the ability to meet the repayments all the time for the full duration of the loan. How do you do that? Well, you make sure you're saving at least that amount or paying at least that amount in rent. What's that amount? Well, that's the amount of the expected repayment plus at least 10 or 15% of an overspend in case, for example, rates were to go up. So A is for affordability. B is about balance of funds. You have to be able to show where are you going to come up with the deposit, the down payment for your home. If you're a first-time buyer, you know you need at least 10%, and in reality, you need more because you're going to have legal fees, you may have stamp duty, you may have some kit-out costs for your property. Obviously, if you're a second-time buyer or trader-upper, you need more again. It's 20% and indeed north of that. And of course, if you're an investor, you need more again. So B is for balance of funds. The C, of course, is for consistency, because what lenders want more than anything else is they want consistency around the income, number one, and the level of savings, the proven affordability, number two. So for example, if you save 12 or 1500 euro a month, but you don't do it every month, well, then it's not consistent. If your income varies because you're in a role where there's lots of overtime, or maybe you earn commission or something like that, again, that can be a little bit more challenging. So the C for consistency is also really important. If you can prove your affordability, if you can prove the consistency of a certain level of income and the consistency of a certain level of savings, and if you've clear evidence of your balance of funds, you're going to be in a very strong position then when it comes to applying for that mortgage.